Welcome to the market geopolitics. This is where a single trade decision can send these massive ripples across the globe and completely reshape entire industries, seemingly overnight.
And today, we're diving headfirst into a story just like that. It's a tale about, well, it's about shrimp, of all things, but it's also about tariffs and a crazy high-stakes pivot that turned what should have been a total disaster into this incredible, unexpected opportunity for India's massive shrimp industry. Yeah, this quote right here from a major industry leader is really at the heart of our story. A blessing in disguise. I mean, that sounds completely backwards, doesn't it? So that's the big question we're going to tackle. How on earth can a move designed to punish exporters actually end up opening new and maybe even better doors? Let's dig in. Okay, so to really get why this pivot was so dramatic, we've got to first understand just how big the crisis was. See, India's entire marine export industry, well, it was dangerously hooked on one single customer. $2.68 billion. Just let that sink in. That's how much the U.S. market was worth to India's marine exporters in just 1 year. This wasn't just some big customer, you guys. This was the absolute cornerstone of their entire industry. And look at this chart. The U.S. made up a full third of all of India's marine exports. As a single country, it was, by a huge margin, the most important customer they had. It completely dwarfed the next biggest market, which was China at the time. And then, bam, the shock. The U.S. slaps a massive 50% tariff on their shrimp. For an industry that's built from the ground up on competitive pricing, this was just a devastating body blow. It was like someone slammed the door, locked it, and threw away the key on their most vital market. The impact was, you guessed it, immediate. Literally overnight, Indian shrimp went from being a great deal to being way too expensive. And what happens then? Well, competitors like Ecuador and Vietnam suddenly look like a fantastic bargain. Just like that, India's biggest advantage, its price, was gone. Poof, completely erased. So, okay, their main market is basically gone. Indian exporters had to think, and they had to think fast. They were scrambling, looking for any kind of lifeline. And they found one, right next door, in an emerging powerhouse. And when I say they pivoted to China, I mean it was nothing short of dramatic. Look at this. In just a handful of years, China's share of India's marine exports just exploded, from under 3% all the way up to 17%. This wasn't some slow, gradual shift. This was a seismic realignment of an entire industry. So you're probably asking, how did this happen so fast? Well, a really key tool here was something called forward contracts. Basically, Chinese importers, backed by huge demand at home, were willing to promise to buy Indian seafood in the future, at a set price. For the Indian exporters, who were facing total chaos, these contracts were an absolute godsend. They offered the stability they desperately needed to redirect their entire supply chain with some confidence. So this timeline really lays it all out, doesn't it? Step 1, the U.S. tariff creates a crisis. Step 2, exporters scramble for a plan B. Step 3, China steps in with a stable offer they can't refuse. And step 4, the result? China is now on a fast track to becoming the #1 destination for Indian shrimp. Incredible. But this story is so much bigger than just shrimp, or even the seafood industry. It's like a perfect little case study of the massive geopolitical shifts happening all around us, right now. We're watching trade routes and economic loyalties get redrawn in real time. And here's a really crucial difference between the two markets. It wasn't just about the money. It was about variety. The trade with the U.S. was almost all shrimp. 96%. But China, on the other hand, was buying a much more diverse range of seafood. And that offered something India desperately needed, a way to stop relying on just one single product. So, when you step back, this shock actually forced a healthier, more resilient strategy on them. The whole industry learned a very tough lesson about, putting all your eggs in one basket. And now they're actively building relationships in Europe, the UAE, Japan, South Korea, and they're even paying more attention to their own market right there in India. Which, of course, brings us all the way back to that first big question. After seeing this massive, crazy shift, can we really call this tariff a blessing? Let's actually weigh the pros and cons. On the one hand, yeah,
Absolutely. The industry was forced to diversify. It broke that super risky over-reliance on the US and opened up these huge new streams of revenue. But then, on the other hand, it's created a new, pretty significant dependence on China. And that, as we know, comes with its own whole set of economic and political risks. It's a really complex trade-off.
And that really leaves us with one final big question to chew on. In this huge, complicated game of global trade, is this pivot to China a real long-term solution for India's shrimp industry? Or have they just traded one risky dependency for another? I guess only time will tell.